Cash is yielding more than stocks at the moment. I'm going to show you what is going to happen next for stocks in this kind of environment. Moreover, we're going to take a dive into what is exactly going to happen with the X app. And of course, we are going to talk crypto and we're going to talk Pulse Chain updates. With that said, welcome to the easiest way out in crypto. Your cash is challenging stocks for the first time in 22 years. When we're taking a look at this graph here, we can see that this graph shows the earnings yield. So profits of the companies divided of the price of the company. Profit per stock divided by price per stock. That gives you an interest, a yield that shows what are the current profits of that company and how much do you need to pay for the company at the moment. Compare this yield to the 3 months treasury bill right here in this graph. And what we can see here is that the bond yields have gone extremely high and stocks are quite expensive at the moment. And this leads to a negative yield of the S&P 500 against the treasury bonds. As you all know, probably bonds are risk-free. You lend out money to the US government and you will get your fixed interest rates, while stocks have a certain risk involved. Now, why is this very bad for the stock market? Because why on earth should I take the extra risk of the stocks to get the same yield when there's a risk-free alternative in the market, which are government bonds? So to clarify again, this chart represents the yield you get from stocks minus the yield you get from 3 months treasury bonds. And this rate is negative, which is of course very bad for stocks. And this happened all of these times, 8 times here in the history. And right now we see it again. Every time this happened, there was a recession. And also these years here in the 80s, 70s, when the stock market did very bad, where we got a stagflation scenario. Moreover, I wanted to share this graph with you. Those are the interest rates of the US. As you can see here, every time they pushed up the interest rates very high, we have seen a recession here, minus 20% in the stock market in 1996, and they lowered the interest rates right after it, as well as here in 1973, minus 40% in the stock market, and they lowered again, and at the absolute peak, the interest rates have been close to 20%. And after that, we also followed a recession and a stock market crash of 26%. Following here in 1989, with also a 20% downtrend. Right now, it is very critical because as I showed you in the previous page, the earnings yield minus the 3-year treasury bonds is negative, so there's no incentive to buy stocks. There is a high incentive to buy bonds, and this is a very bad sign, as well as this historical data right there. Moreover, as I showed you in the previous video, the credit card, the consumer debt is very high at the moment. The consumers aren't likely to buy more, so the companies, they will have a smaller revenue. They already cut the cost, mass firing people. They already increased the prices through inflation, so they don't have much room to create a higher revenue. And with consumers having high debt, credit card debt with over $1 trillion, they are not likely to keep consuming at this level, so their consumption level is going down, which will lead into a smaller revenue and into a smaller earnings of the companies, which is also going to fuel up the recession we are going to see. When we take a look at the S&P 500 now again, we can expect us maybe to come down again here from this point around 10 to 15%. This is what I'm expecting, and holding a high cash growth at the moment, which is also what multiple analysts and experts say. So just so you are aware of that. Moreover, we're going to take a look at Elon Musk. And what is he about to do with X? I think he will make X a great app. They said they're going to implement phone calls very soon, which is very nice. And they're also going to implement cryptocurrency payments, as they now have officially acquired a cryptocurrency license which allowed them to do basically the same as every other cryptocurrency exchange. And that is amazing. And this is specifically true for Dogecoin, as Elon Musk is probably the biggest holder of Dogecoin. Let's take a look at the DEXs by volume, and we're going to see that pulsechain is now at rank number 14 of those DEXs by volume. We have seen a new DEX right here, Linear, launched recently, and they made a cumulative volume of 160 million, which is quite good. And they spiked really high. It is also a EVM compatible blockchain. And as you can see, ever since pulsechain launched, which was here in May, we have seen here days of 700 million in monthly volume for pulsechain. And right now we're back at the number 15, which is not too bad. As you can see, there are a couple blockchains that are more busy, but they have quite of a value. When we take a quick last look at the prices here, we can see that pulsechain is even down again, and they're having a hard time to recover. But those are great times to dollar cost average into this protocol, as there will be a huge hype around it in the next bull market. With that said, if you haven't done so already, go over to my Twitter right now and hit the subscribe button on YouTube, follow me on Twitter, and leave some likes and some thumbs up. Thank you very much for watching this video till the very end, and easy way out.